Is the stock market about to crash in 2025? 2024 was explosive. The S&P 500 surged 23%, fueled by AI and tech giants like Apple and NVIDIA. The market felt unstoppable. But a rare gap between market cap and equal-weighted indexes has investors on edge. Valuations are hitting historic highs, and fears of an AI bubble are growing. Could 2025 bring the crash everyone's dreading? I'll break down 5 key risks that could shake the markets. Don't miss this. It could be crucial for your portfolio. Let's talk about inflation in 2025. It's not going anywhere anytime soon. The Federal Reserve wants it at 2%, but it looks like it'll stay above that target for a while. Experts are even calling it stayflation, inflation that just refuses to leave. Michael Ashley Schulman, Chief Investment Officer at Running Point Capital Advisors, has a cautious outlook. He's keeping an eye on big risks like geopolitical tensions, the growing U.S. deficit, and the chance that the Fed might ease up on interest rates too soon, any of which could make things messy for the economy. Now, here's the kicker. Schulman says stocks are already super expensive. If you're looking for better opportunities, he suggests checking out private markets, hedge funds, or private credit. There are definitely better places to put your money than overvalued stocks. But here's the part that stuck with me. Schulman doesn't think we're heading for a full-on market crash in 2025. That's the good news. But don't get too comfy, because he warns about a stomach-dropping correction that could make you want to throw your phone when you check your portfolio. His advice? Be prepared. Have a plan. When things get bumpy, and they will, it's much easier to ride it out with a solid strategy in place. Let's talk about our national debt. It's a ticking time bomb. Debt may seem boring, but it could destabilize the market. Stocks are ridiculously expensive, and while they'll likely stay high in 2025, the real danger is the cost of our debt. The US government is spending over $800 billion just on interest this year. That's nearly the defense budget. And it's only going to get worse. Countries like China, Japan, and the UK, holding our bonds, might demand we fix our fiscal mess before lending more. If they do keep lending, they'll likely want higher rates. If interest rates soar, markets could panic, causing a sharp drop in stock prices. Tanis isn't sure when, but he's confident it's coming. So, stay alert. The market may seem strong, but with debt spiraling, fractures are showing. Have a strategy, diversify, and watch for the debt bomb. When it goes off, it'll affect everything. Here's a potential game changer for 2025, Trump's tariffs. Whether you love or hate him, Donald Trump is back. And starting January 20th, he's expected to double down on his trade policies. In his first term, tariffs were a major focus. Steel and aluminum got hit hard. This time, he's going harder. Trump's planning 25% tariffs on Canada and Mexico, and 10% on Chinese imports. That's a bold move making economists buzz. Why does this matter? Tariffs don't just hurt other countries, they affect us too. Expect higher prices on cars, electronics, and more, which could feed into inflation. Michael Ashley Schulman warns these policies bring uncertainty. We could see ripple effects on trade, inflation, and fiscal health. A potential trade war could shake up global markets. What does this mean for us? Buckle up. 2025 could get bumpy with rising costs and market volatility. Let's discuss a major factor for 2025, the Federal Reserve's next move. Recently, the Fed has been cutting interest rates, but there's a chance this could stop soon. After lowering rates in September and November, many expected another cut in December, but that might be the last for a while. Why the change? The Fed's waiting to see how Trump's economic policies impact things. Tariffs, deficits, and possibly faster growth are on the table. Vuk Vukovic, a hedge fund manager, thinks these policies could lead to both inflation and economic growth, a tough balancing act for the Fed. Should they keep cutting to support growth or raise rates to fight inflation? Here's the twist. If the Fed reverses course and raises rates, it could cause market chaos. Factor in a potential trade war or a bond yield spike, and things could go south quickly. Bottom line, the Fed's decisions will make or break the market. Keep an eye on these key moves in 2025. Let's talk about something on everyone's mind lately: housing. Heading into 2025, there's a lot of anxiety surrounding the housing market. During the 2024 holiday season, many people weren't as excited about buying homes as usual. Big purchases, especially homes, just weren't generating the same buzz. A report from Clever, a real estate firm, shows that 45% of buyers and 47% of sellers expect home prices to keep rising in 2025. That's a lot of people bracing for higher prices, which is creating a lot of uncertainty. But here's the kicker. 68% of buyers are worried those rising prices will push their plans to buy even further into the future. It's like everyone's trying to catch a break, but prices keep climbing. On top of that, 42% of people feel that mortgage rates are a major barrier right now, and 41% are even concerned about whether they'll be able to get approved for a mortgage next year. So, as we move into 2025, the housing market is definitely causing some stress. Rising prices, high mortgage rates, and approval concerns are keeping many buyers on the sidelines. If you're looking to buy, it's a tough market to navigate. To wrap things up, as we look ahead to 2025, the big question is, could we see a stock market crash? There are definitely some risks to keep an eye on. Inflation, rising debt, concerns over the housing market, and what the Fed might do next. These all have the potential to shake things up. But when combined, they create a storm of uncertainty. But here's the thing, don't hit the panic button just yet. The market's always full of surprises. Crashes are part of the cycle, but so are recoveries. The key is having a clear strategy in place. Whether it's diversifying, keeping some cash on hand, or staying up to date on the latest trends, being prepared will help you weather any storm. As we move into 2025, stay focused on your long-term goals and be ready to adjust as needed. If this breakdown helped, be sure to like and subscribe.